Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenevec on Bloomberg Radio.
We're going to stay, Tim, on the U.S. economy. We're going to broaden out as well, especially when it comes to geopolitics and the global economy, something we talked about with our Stu Paul yesterday.
We got a great voice to do this. Dr. Adam Posen joins us, president of the Peterson Institute for International Economics, joining us this afternoon from Washington, D.C. Before we broaden out, Dr. Posen, want to talk about the U.S. economy coming off of that inflation print that we just talked about with Mike McKee. Where do you see the U.S. economy heading?
Well, thank you for having me back, Tim. And I agree with a lot of what Mike said about what was under the hood. But the main thing I think your investor listener should be thinking about is that if you're plus or minus 0.1, 0.2 from expectation on any given month's print, it's not real information. I mean, nobody has their expectations that precise. So you have to look at the bigger stories. And to me, the bigger stories in the U.S. are that we have a labor market that isn't cratering, as people used to worry about, that has solid retention of employment, not huge employment growth, but solid retention. We have potentially some very stimulative fiscal policies coming down the pike, in that the Republican majorities in the Congress may give President Trump checks to hand out ahead of the midterm elections in November. They may, I hope they will, restore some of the funding for Obamacare insurance subsidies that were taken out in last year's bill. And we've got, in the end, a bunch of things on the tariff front, and even more so on the anti-migration front, that are percolating through the economy, and people were premature to say, oh, it all must have happened by now or it won't happen. That's not right. It takes time for businesses and households and migrants to make decisions. So I'm with Mike. I'm with a lot of people. I think the pricing of 3 Fed cuts this year is much too many.
So this explains, or I'm assuming this kind of explains, Dr. Posen, that you and Lazard CEO Peter Orszag, of course, formerly director of the Office of Management and Budget and director of the CBO, you guys put out a column in January that the Fed's 2% inflation target could be totally left in the dust. You think inflation could, quote, surprise to the upside, potentially exceeding 4% by the end of 2026. Is it because of what you just laid out in terms of, tax cuts, federal government spending? These are things that are going to be stimulative.
Stimulation, Carol, exactly. And Peter and I was glad to co-author with Peter because he knows the fiscal stuff. So if he and I agree that these are real likely risks to more stimulus out of fiscal, I'm willing to buy it, or willing to sell it, actually. But I think the other things that we're talking about is the lagged effect of tariffs and anti-migration. I wrote about this in a column for Businessweek magazine earlier this month. I think we're talking about, and Peter points to from his perch at Lazard, various corporate CEOs like at Amazon or the beige books from the Fed that say companies are only just now passing through some of these adjustments. I think there's also just the bottom line that the labor market is more solid. And so if we get any inflation, it's in a more tight economy. And then finally, whether or not we get into the new leadership at the Fed, after all the attacks on the Fed over the last year since President Trump came back into office, you have to be a little more worried that the Fed will not react quickly if there is inflation, and that to some degree becomes self-fulfilling. So I think there's a lot of things going on. Now, it could be a recession. It could be that the migrants really haven't left yet. They could be that the government breaks down and doesn't pass the stimulus, in which case inflation won't be that high. But I think each of these is pretty darn likely, and cumulatively, they get you up to high inflation by end of the year.
You mentioned the Fed, so I want to go there, and then I want to do some demographic stuff, because there's a lot of questions about what the economy looks like in the next few years with the decline in immigration. On the Fed, you said if the Fed is less reactive moving forward, is that a result, you think, of Kevin Warsh being nominated as chair of the Fed?
I think it's a result of the desires expressed so strongly by President Trump and by Secretary Bessent, and by not just Kevin Warsh, the nominee, but all the shortlisted people who would be Fed chair, in favor of loosening policy quite a bit. And doing so in the face of data which the vast majority of the Federal Open Market Committee has publicly said leads them to want to pause, I think should give people pause. So I think there is a real issue there. I think there's also genuine debate to be had. Nominee Warsh, Governor Waller, and others have said that some of these tariff and other effects are one-time shocks. They're not going to be passed on. We'll see. That would be very unusual, but maybe. They've also said, or started to say, that productivity growth will bail us out. We'll be able to have more growth with less inflation. That's more plausible to me, but even there, that's by no means for sure. There was a nice piece by Jason Furman in the Wall Street Journal discussing this. The angle I would take is, just as Governor Waller or Kevin Warsh says with the tariffs, you get a real income shock, in this case positive from AI. It's indeterminate ahead of time, to use a fancy word, how much of that shows up as income and how much of that shows up as price disinflation. And my reading of the historical evidence is, when you get a new technology, most of the disinflation stuff comes with a lag, because that only comes when companies start restructuring, changing their workforces, figure out how to use the stuff. Whereas some of the income growth, the productivity growth, you get up front just because we've all got a new toy. So I think there's room for me to be plenty wrong, but I think we're going to end up pretty high inflation and a Fed that's behind the curve.
So is that the biggest realistic risk to the U.S. economy? I wanted to insert that word realistic, because I think we talk about risks all the time, and there's a list, as long as my arm and then some. But I'm just curious, is it higher inflation? Is it higher interest rates? Is it demographics, an older population, folks not having babies? Is it less immigration? Is it rising debt? Is it China-U.S. tech war? Like, what do you think is the biggest realistic risk to the U.S. economy, maybe to the global economy?
Yeah, well, thank you for putting it that way, Carol. I would sort the risks by two categories, the realistic and unrealistic, as you said, but then at what time frame they hit. I think the realistic risk for the U.S. in the next 3 to 12 months is probably inflation is the biggest risk. I'm not that worried about a downside unemployment. I'm not that worried about trade wars turning into hot wars with China. I'm worried about it. It'd be terrible, but I'm not that worried it's likely. But if we start looking out 1-2 years, then to me, the realistic risk starts to get into some of those demographic issues you and Tim just mentioned, because we are cutting off a lot of people from the workforce by excluding or deporting migrants. And there's a lot of things that happen, for example, the female labor force participation in prime age women. If you don't have cheap available health care and cheap available child care, and the budget doesn't support that out of the federal government, and healthcare is cut back if they don't pass the subsidies for Obamacare, and even if they do, it's still cut back. So those are the things in the next couple of years. But then when we think beyond that, then you've got a tug of war between the positive impact of AI and the potential for large-scale unemployment as people adjust to AI. And there, I gotta say, not only but the economics profession has no clear idea. There are a few people out there who have very strong opinions, but there's no consensus, and we're still working on that.
What's your best bet there? There's no consensus. We don't know what's going to happen. We can't see the future, but what's realistic?
What's realistic is productivity growth stays up as high as it's now starting to trend, maybe even goes a little higher. and unemployment shoots up in a couple years, but doesn't shoot up enormously, and it is disproportionately on younger people. And that you get some decline in labor force participation because people figure out different ways of living their lives, and so the unemployment number understates how many people feel displaced.
Yeah. A million questions I want to ask you. Are we seeing kind of the fruits of the gaps in wealth playing out globally? And is it kind of where we are? It's amazing to me where people point to stock market highs. We've talked about the K-shaped economy a lot. Sure. But how many conversations I have on a regular basis with so many Americans that just find it difficult, and ones that I wouldn't even think so, that are probably in a decent income bracket, but it just doesn't feel so good.
No, I think as economists, you all are anchors, you cover everything. But as economists, we've got to be a little bit modest that sometimes when people don't feel so good, it's not about the economic numbers. They may say it's about that, but it's about their relative position in life. It's about uncertainty. It's about, through an ideological lens, is their party in power, not in power? Are their kids? So it's not that people's feelings are unimportant, but obviously not. They can vote, they can choose. But the connection, and there's very clear data on this, the connection between surveys of how good people feel or how confident people feel has become much more tenuous in terms of linking it to actual economic outcomes than it used to be.
That's interesting.
What I would say, Carol,
we have to run though. Yeah, quick.
Yeah. No. Sorry. Oh. Just to say that the global situation is similar to the U.S. There's a lot of youth unemployment in China and in Europe, and that we got to think about.
Just means we want to have you come back real soon. Dr. Posen, be well. Have a great weekend.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Hey, consumer spending on Valentine's Day expected to reach a record $29.1 billion, according to an annual survey that was released by the National Retail Federation and Prosper Insights and Analytics. Now, that amount surpasses the previous record of $27.5 billion. That was last year. Shoppers budgeting a record almost $200 on average for gifts, an increase from $189 last year and surpassing the previous record of $196 spent in 2020.
So basically people are going to spend $200. Is that what you're telling me?
Yeah.
Okay. That seems like a lot.
It seems like a lot. Like I love.
Yeah. But
it's like, I don't know. Yeah, it's sweet.
Okay.
I do love.
Let's ask Christina
gifts
Stembel. She's founder and
Day.
CEO of Farmgirl Flowers. It's a firm she built from the ground up. She bootstrapped it starting back in 2010, making bouquets from her San Francisco apartment. She's in Gig Harbor, Washington today at what the company calls the farm quarters, which I'm guessing is like, there's a headquarters, there's a farm headquarters. This is the farm quarters. Where are you exactly?
Yeah, we're about an hour south of Seattle.
And what's going on there?
Lots of busyness here going on, just like Valentine's Day and Mother's Day, as you know. Been on here many times with you. Thank you for having me back, by the way. But just a lot of busyness, a lot of forecasting, making sure the orders are coming in. We're taking care of our customers well. All the normal Valentine's Day hubbub.
All right. What we do know, though, is that people think Valentine's Day is the busiest day for you, but it's not. Mother's Day is a busier holiday, right?
Yeah, this is our warm up to Mother's Day. Okay. So it's good to have this one first. Mother's Day is about double the size of Valentine's Day for.
Tell us about kind of what's going on behind the scenes. And I am curious. We are curious. Is it busier than last year, or no? You are always such a great read on the consumer, because I think about things like holidays is when we can find the money to spend. So give us an idea of what the consumer is doing this year, what they're buying, how much they're spending.
Yeah. It kind of falls in line with what you just said. We are seeing that people are spending a little bit more this year. Orders are up a little bit as well year over year, which we're really happy about. And they're spending more this year, which is also a great thing. Valentine's Day has always been kind of a high average order value, a high ticket item holiday for us. Mother's Day tends to be a little bit less. We get a lot more orders, but people spend a little bit less on their moms, unfortunately, than their lovers.
What are they buying this year?
Yeah, they're buying, we did a survey again. We hadn't done any surveying of our customers since before COVID. So we did a great survey this year that told, kind of gave us some more insights. Everything's kind of, changed a lot since COVID. So we wanted to see if we were still providing what customers wanted. And we found a lot of the same from before COVID and a little bit different. So it's a thought that counts. Our customers want their loved ones to really think about what they like, to know what flower, like their favorite flower. Like instead of a red rose, we did find, just like before COVID, not many women want true, just standard red roses.
No, we don't want it, guys. Get the message. Sorry.
Totally. You're so right, Carol. Women want a bright, mixed, beautiful bouquet. So that's what we're giving our customers, a lot of options on bright, beautiful bouquets. But since men are the consumer for this holiday, we also have to keep them happy. We found this many, many years ago, over a decade ago, when I was just kind of stumped with why the senders were not happy, but the recipients were. And so that was the first survey I ever did over a decade ago, and found that just what women and what men want are very different. So men want a red rose. So we're mixing red roses in with a lot of other flowers to give women what they want and men what they want when they order. But the main thing from our survey showed us that women really, and everyone really, not just women, want their partner to really think about the gifts they're giving. So if their favorite flower is a ranunculus, don't send a mixed bouquet. Send, the 40 stems of beautiful Hanoi ranunculus that we have on our site. So they just really want to feel like the person that they're with knows them really well.
What does it mean when there's a Saturday delivery? I think about that a lot. Is it better? Is it easier? Is it harder? How do consumers think about it?
Yeah, it's horrible. So, I'll just give it to you straight. It's really bad. The only day worse is Sunday. So next year is going to be great. When you're a company our size, which is small, we're a small business, we don't have the buying power that some of the giant companies have that have made consumers think that deliveries happen at, 11 p.m. on a Sunday even. That doesn't happen for companies outside of those, Goliath-sized companies that you think of with that. So, we can't get Sunday deliveries, and Saturday deliveries are tough. So not everybody lives in an urban enough place to receive deliveries on Saturdays, but the senders don't know that necessarily. So, we offer Saturday delivery. It's, we have it right now at the same price as is during the week. But there's a lot more risk on Saturdays that they're not going to make it there in time. So another thing we found in our survey is that this surprised us, actually. Women don't want to get the flowers on Saturday. They want to get them earlier in the week so they can enjoy them. And on the weekends, they have very full schedules. So they don't want to have to worry that they're sitting on their front porch freezing somewhere, if you're in parts of the United States where it's freezing right now. And the flowers aren't going to look good when they get home. So we found that most people wanted to get them early. We saw that in the orders too. Most people selected Friday for delivery. So now that timing's up. So now we're getting the people that might have slipped their minds and are ordering for Saturday delivery. But we're always on pins and needles it's going to be a higher percent that don't make it in time on a Saturday.
Yeah, the last minute folks out there making the calls right now. Christina, in the past year when we had you on, you've spoken about tariffs because a lot of what ends up in these bouquets comes from outside of the United States. Just give us an update there and the way that you've shifted your supply chain or not, and how the bottom line has been affected.
Yeah, tariffs are definitely impacting a lot this year. In ways that people don't think about. And I wouldn't have thought about either. So this is no shade on anybody. I wouldn't have thought about this if I didn't have a flower company. But flowers, they cost a lot more in the United States. So, all the tariffs on encouraging to bring back manufacturing and agriculture to the United States, it just doesn't have that impact. I understand the intention is there, but the impact isn't that way. Because what happens it's not just, the flowers themselves. So when you're bringing in flowers from Europe or South America, which is a tremendous amount, I think the stat this year is 80% of the exports from Colombia came to the United States. I just saw this morning. So, wow. A lot are imported, and you pay more for those imported flowers. But for U.S. grown flowers, you have all of the materials to grow those flowers. So the bulb prices have gone up so much. the fertilizers, everything that you're bringing in still to grow them here. And then on top of that, the land, the labor, everything here costs so much more. The insurance, the legals, everything here in the US costs more. So, for instance, a good example, just to kind of break it down and
just quickly,
like a tulip. A tulip is, 3 to 4 times more expensive to buy it here in the US. We're still making that choice to buy tulips here, here in the US to support the farms that we've worked with for a long time. But we could get them significantly cheaper if we imported them, even with the tariffs, because of what the farmers here are experiencing.
Wow. Yeah, no, you really kind of open a window for us in terms of what it means in terms of farming here in the United States. Happy Valentine's Day. Good luck. I know it's a crazy time for you, but always fun to check in with you. That, of course, is Christina Stembel, founder and CEO of Farmgirl Flowers.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
You know what is one of the most read stories on the Bloomberg?
Anything related to Jeffrey Epstein.
Yeah. It's an interesting story about Goldman Sachs in that regard.
Yeah, from a resignation of the top lawyer there to the resignation of one of the most powerful figures in the Middle East. We are all over the fallout from the latest batch of the Epstein files. Todd Gillespie's here. We have Jason Leopold next hour to really tell us what the steady outflow of information has been from these files and potential repercussions moving forward.
All right. Also, I'm holding this up because this is Bloomberg Markets Magazine. It's the February-March issue, and it is out. It asks, should we be afraid of the big boom in private credit? The asset class is the subject of the latest issue of Bloomberg Markets Magazine. The editor is going to join us in just a few minutes. I do feel like credit in all its twists and turns is certainly top of mind for everybody.
Okay, champagne ahead of Valentine's Day. That sounds nice.
Yeah.
All right, could cost you more due to those tariffs. The founder and CEO of one champagne company. Yeah, chocolate covered anything.
No, but they go, with.
Oh, I don't know.
Have you not seen Pretty Woman?
Okay. I'm trying to stay on track here.
Oh, right.
This company is suing the Trump administration for what the founder and CEO says is $78,000 she is owed that she spent on tariffs last year.
Well, Supreme Court might have
Remember
something
who's
to say
paying
about
for
that.
these tariffs.
Supreme Court, though.
Yeah,
right?
that's where it's going.
All right. Lots to come over the next 2 hours. Do not go anywhere. First up, though, a check on that trading day. Here's Amy Morrison for Charlie Pellet.
All right. Thank you, Carol. Sources telling Bloomberg that SpaceX is pursuing a dual-class share structure in its planned IPO this year. A 2-tier structure would give select shareholders stock with extra voting power, allowing them to dominate decision-making, but it would also allow insiders, like Elon Musk, to maintain control of the company, even with a minority stake. And you're right. Tamer than expected inflation numbers spurred bigger bets on Fed rate cuts, moving markets into the green, but just a little bit. Just a little bit, paring back some of those gains from earlier today. Right now, S&P 500 up 0.25%. NASDAQ little changed on the upside. The Dow up about 0.2%. 10-year Treasury yield at 4%. The 2-year yield at 3.4%. Let's check Bitcoin now. Oh, it's fine. Up almost 5%, around $69,000. Traders now pricing a 50% chance of a third rate cut this year. CPI fell to a nearly 5-year low last month as apartment rental price growth slowed and gas prices fell. That offered some relief to Americans who are still dealing with sharp increases in costs of the past 5 years. Consumer prices are about 25% higher than they were 5 years ago. Ethan Devitt is global market strategist at Moneta Group Investment Advisors.
Certainly not just noise. We have to look at how this is cascading through different sectors. It hit our sector just this week, private wealth. There is definitely a sell first, ask questions later type of mentality.
Moneta Devitt was on Bloomberg Open Interest. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back to Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec.
Hey, thanks for that update. Do appreciate it. Well, one of the most read stories on the Bloomberg, Kathy Rumler leaving her position as Goldman Sachs' top lawyer, drawing to a close a month-long saga that saw the investment bank staunchly defend her over previous associations with Jeffrey Epstein. We've got Todd Gillespie with us. He's Bloomberg News banking reporter. He joins us here in the Bloomberg Interactive Brokers studio. So her name has been associated with Jeffrey Epstein for months at this point, but the bank changed its tune after the latest batch?
Well, apparently not, Tim. And in fact, that's actually one of the most interesting things about this. David Solomon was on CNBC this morning.
Oh, yeah, and
just
he
said
fully supported her.
Right.
Yeah.
And she offered her resignation. And this is actually one of the things that is quite incredible to a lot of the partners and senior executives at Goldman, is how staunchly the leadership continues to defend her. And there was in fact no contrition, no acknowledgement of any wrongdoing at all about Rumler's behavior from David Solomon this morning when he spoke on TV just before, by the way, he went to play golf alongside Ron DeSantis at Pebble Beach. Oh. So some people are suggesting that perhaps Goldman's response to this whole crisis and, the 2 weeks or so that David Solomon has been battling this out essentially against the media and internally and perhaps even against his own psyche. Who knows really when it comes to David Solomon sometimes. Some are really asking questions about his judgment now. And really that's where people in the next few days are going to start to turn their attention.
Who is asking those questions? I mean, are employees internally? Did it become difficult for her internally because of this?
Yeah, I mean, certainly employees internally felt a lot of them couldn't necessarily raise their concerns to David Solomon, bearing in mind, he's someone who has consolidated power at this firm over the past few years away from its partnership structure and much more towards a sort of traditional top-down CEO environment. You also have a management committee that he's expanded dramatically, which now has 46 people on it, way more than any other Wall Street bank, which essentially, when you talk about collaboration and everything, actually, in the end, one might argue it ends up consolidating power in the hands of, the one CEO who's essentially at the top of that.
All right, devil's advocate for a moment. Like some would say, well, what did she legally do wrong? Like, did she provide him any legal advice?
She certainly did, Cal, yeah. And in fact, one of the most incredible things this week that came out was revelations about emails in this drop that showed how she essentially helped him suppress the media strategy and legal fight by Virginia Giuffre, who we all know, one of the most vocal accusers of Jeffrey Epstein, who committed suicide last year. Mm-hmm. Bear in mind the story that
wrote a book.
Sorry?
She wrote a book.
She did indeed write a book, that was posthumously published.
Right.
And she, and throughout all of this, you can see these emails that show actually that how Rumler talks about relishing the potential opportunity. If only she could have been the lawyer to depose her at the stand. She helps advise lawyers of Epstein on how to wage their campaign to stop her interview with Good Morning America from airing, which famously never aired and has still never aired, before she died. Yeah. And so there are these moments here where people are starting to see these emails and then question more deeply at the firm in particular why Goldman was continuing to stand by her, and also what came up in this due diligence process that they said they conducted and that led them to such confidence in her.
What do we know about her relationship with Jeffrey Epstein? Why was she so close to him?
Well, one thing that's clear throughout the emails is that he consistently started leaning on her for years for informal legal advice, for media strategy. She was also receiving things in return, right? He was introducing her to people. He was advising her on, getting a new job, for instance. He was giving referrals to people like Larry Summers, who was close to Sheryl Sandberg at Facebook when she was looking for a potential job there. And all through this, you see this like very transactional, reciprocal relationship between these two people who, as lots of people have been troubled throughout these files, this is, many people have mentioned in this case in particular, the plutocratic class that sort of comes, and that their intimate levels of behavior that come out within these files are quite something. And I mean, it's important to say, that she says she's never done anything wrong. She's never done anything illegal. She says she's never represented Epstein in court or advocated on his behalf to the press or to any government officials.
And yet, as we all remind, that in 2008 is when he did the plea agreement and he was a registered sex offender. So at that point, anything that anybody does in terms of relationship is with that knowledge.
Yeah, absolutely. And I mean, one of the things that, there's an op-ed, for instance, that he was trying to get published in the Washington Post that she helped edit that basically defended, the strength of the plea agreement and the federal investigation that he was under back in 2008. She entered this relationship with him in around 2015. She entered this friendship with him. She calls it a friendship, and says that she wants to help him get rid of his legal troubles. And this continues and persists even after the 2018 Miami Herald investigation, which released, accusations of abuse by 60 women. She ended up in court, standing behind his lawyers during his arraignment.
Yeah. So some would say judgment comes into call, certainly. Todd, thank you so much for keeping us up to speed on this. Banking reporter at Bloomberg News. This is one of the most read, if not the most read story on the Bloomberg terminal today.
Also, one of the most read stories has to do with SpaceX considering a dual-class share structure in its planned IPO this year. With us with what you need to know is Bloomberg Tech co-host Ed Ludlow. He joins us from San Francisco. Ed, the dual-class share structure, nothing uncommon about that in Silicon Valley and, in media companies too. To be fair, is this all about Elon maintaining control?
It's all about Elon maintaining control, right? I mean, it's not surprising that this would be something SpaceX is considering. What I understand from sources, and we did this story of Ryan Gould, right, is that it's being considered. Like, I don't think they're as far as having decided the structure of an IPO. But the state of play with SpaceX anyway is that it's kind of already structured that way. Musk has a lot of the majority of influence and control, but he doesn't have a financial majority. So the cap table is quite diversified among all the names, like Google and Fidelity and Founders Fund. But within that, in terms of power, in terms of votes, as a private company, Musk's already there. And I just point out finally that he tried to do that previously with Tesla and it didn't work, and so I think there had been an underlying assumption that they would at least try with SpaceX.
If you were sitting down, I don't know, with Elon, what would you ask him about this?
Oh goodness, if I was sitting down with Elon, I mean, it's something I think about day and night. As it relates to voting control, the one reason it's not surprising is if you think about Elon Musk's stated motivations with Tesla and the compensation package, right? So when the compensation package for Tesla, and again, people are going to get confused because we're jumping from SpaceX, Tesla, are they one and the same? Who knows? He always framed this as being not about money. He didn't care how much he was paid in the end. He wanted to have enough voting power so that he could execute on what he thought his vision for the company was in the AI context. And with SpaceX, the logic's very much the same. You have a company that's doing really well at launching rockets and payload for customers and has got a very successful so far constellation-based internet service in Starlink. But he's ripping up the script, right? The future is space-based data centers. And so the control part is for him to be able to do it.
A catapult to the moon. That's what he wants. Ed Ludlow from Bloomberg Tech.
I thought it was Mars.
Moon and then Mars.
Okay.
Yeah, that's what we do.
Just
check out Ed's story, Ryan Gould's
Moon.
story, and more on the Bloomberg terminal. You are listening to and watching Bloomberg Businessweek Daily. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
The best performer in the S&P 500, Coinbase, up 16.8% as we speak. Volume is actually triple the average. Company posted weak results, yet people are buying. I want to bring in Stacey Maria Schmel.
Hi.
Bloomberg News executive editor for crypto, payments, and digital finance. Is this a signal? I'm going to do this. I'm going to put you on the spot.
Do it.
Is this a signal that people think this is the bottom?
I think it's a signal that people hope it's the bottom. One of the interesting things that we've been keeping an eye on is, we talked the last time that I was here. Thanks for having me back.
It was just a week ago, and things have changed a lot since then.
It's a lot of crypto stuff.
Folks really are looking for signs that even if it's not going to get better, it's not going to get worse. And one of the interesting things about the Coinbase results yesterday was that there was this feeling of they had a rough quarter. Everybody else had a rough quarter. A lot of the, loss that they reported was based on the market value of Bitcoin. And so maybe, coming into Q1 and Q2, that's as low as we're going to see it for the foreseeable future. And so even though you had various analysts and, different folks on the sell side adjusting their price targets, it was still very much kind of like, okay, we think now we're at a level that stuff may be oversold. And so let's not get out of control here.
I'm glad you went there because, you go back to the October high that we saw. Coinbase has fallen as crypto has fallen, right?
Yeah.
And it's down about 60% since then. So there's a lot of bad news factored in at this point. And it's not like these results were terrible, right? So that's just, okay, like you said, maybe the worst is over.
The results were kind of, they missed some estimates, but not by a huge amount. And there was some optimism about what might be coming in the next quarters. And I think one of the things, interestingly, fintechs and digital asset companies aren't being punished by the market because they are a little bit outside of the AI narrative. They're a little bit outside of the why do you need billions of dollars in capital expenditure. And so, they're really kind of benefiting from this idea of if you think that Bitcoin has had a rough time, but the road ahead looks more positive, it's time to buy up some of these stocks.
Well, can I just say, in the press release, there was optimism from the Coinbase team about regulation and things. And are they kind of right that that's going to make it better for anybody? Or can we not make that assumption?
I think there's very much a sense within the digital asset industry that there's one remaining key piece of legislation that they are really desperately looking forward to, and that is what's been called the Clarity Act, which would, codify some elements of market structure and also make some final adjustments to how stablecoins are regulated and legislated. The problem for the digital asset industry is the banks and the crypto companies do not agree on how to move forward with some of those provisions. And that's been a real drag on both sentiment and prices across the market.
When there is agreement, if there is agreement, does that change things markedly?
Absolutely. Our own analysts on BI have said that, companies like Coinbase and Robinhood will really benefit from this agreement to go forward, because one of the things that it removes is the uncertainty that if there's a change of administration, if Democrats retake the White House, then, they'll just undo the executive orders and everything else. So having things actually codified into legislation really provides a much clearer path for the digital asset companies.
So back to Coinbase, and then we can branch out a little bigger. If we think about Coinbase, can we think about Coinbase like we think about Intercontinental Exchange or the NASDAQ?
I would say that Coinbase, much like Robinhood, has demonstrated a real commitment to diversifying in some of the ways that these other traditional exchanges have. I think they are doing some really interesting things around the fact that they are how are we thinking about tokenization? How are we thinking about custody of different kinds of digital assets? What are our relationships with the ETF providers in that particular vein? So from, the analysts who are more bullish on the stock are really looking in that forward-looking direction of digital asset companies. Don't only think of them as a proxy for Bitcoin, think of them as fintechs in that broader sense.
Because if this is a company where transaction revenue accounts for the majority of revenue, and then subscription and services is the minority of revenue, and there are different segments and lines within each of those segments. But if we think about it, if they're making money from transactions, people are buying and selling crypto no matter what the price of Bitcoin is. So they're still making money even if the price of Bitcoin is going down because those transactions are happening. Do more transactions happen when prices rise?
Really depends. So, one of the things you sometimes see is that when prices are falling, you might have more selling or people kind of sitting out on the sidelines or exiting completely. The bigger risk from some of the analysts that we've been talking to crypto companies is people spending less money on transacting on crypto exchanges and more money on the prediction markets. Right. So again, it's this idea of if you're a person who used to trade meme stocks or you're into sports gambling and you're Bitcoin and Dogecoin and meme coins, this seems fun. And now you're or I could be putting some money on Polymarket, I could putting some money on Kalshi. So the competition is not so much is this person interested in crypto for the sake of crypto? It's more they have some discretionary income, and there are more ways that you could be, spending that than there were previously.
So then how do you think about this? Because I feel like you and I have these conversations, Tim, a lot too. But are we still what will cryptocurrencies really be in terms, are they going to be this thing that totally changes how everybody and everything transacts, or not necessarily?
Deep existential questions on a Friday.
I know, sorry.
It's a 3-day weekend.
We do have champagne later to make up for it. But like, do you know what I'm saying? Like, I still don't know, do we have to have what does it mean for then the big banks or the big financial firms, or I don't know, just all the financial infrastructure that we have today? Does that mean they will likely be all a part of this too?
So there's absolutely a version of what you are describing, which is in fact the version that banks are preparing for in a lot of ways, which is that crypto becomes a traditional financial payments rail alongside like the SWIFTs and the ACHs and everything else, where it's just like so normalized that it's a way of either transacting or moving money across borders or trading certain types of assets, and you don't even think about it. And it's just like built into the system. And one of the great ironies of that is that it's like absolutely the opposite of what the people who came up with crypto wanted.
Exactly. Because to me, that sounds like a lot of oversight and a lot of regulation. And so then what?
But also potentially like way more volume, right? Like like different kinds of use cases.
Yeah.
That I think that is, to me, what makes this beat so interesting. It's, you can either have this perception that you are betting on Bitcoin because you think all of the world's governments are going to fail, or you could have this perception that you think things like stablecoins are interesting because governments are going to need more ways to like monitor financial transactions across borders.
This is why she's the best.
I know. Oh my gosh.
Stacey Maria Schmel, executive editor for crypto payments and digital finance for Bloomberg News, in here in our Bloomberg Interactive Broker Studio. Check out what she and the team do on the terminal.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.